Beyond the ban, the $50 billion PR shift shaping GTA real estate today. Ciao, everyone. Welcome back to the podcast. Today, we are tackling one of the biggest headlines confusing Canadian buyers and investors right now: the foreign buyer ban puzzle. For years, politicians told us that banning non-resident buyers would magically restore housing affordability. But if non-residents are blocked, why are economic projections showing that newcomer purchasers, specifically new permanent residents, could drive over $50 billion in Canadian home sales? Today, we separate headline noise from real market fundamentals so you can build real estate wealth with clarity. The $50 billion reality check. Let's look at the numbers. Recent market data and economic projections reveal that newly landed permanent residents, PRs, could contribute over $50 billion in residential real estate transactions across Canada over the coming cycle. Think about that figure, $50 billion. That isn't speculative offshore money sitting in empty glass towers. This is direct end-user demand from families moving to Canada, establishing tax routes and putting down permanent foundations in key centers like the Greater Toronto Area. Permanent residents versus non-resident speculators. Here is where the public debate gets a little tangled up. The Prohibition on the Purchase of Residential Property by Non-Canadians Act explicitly targets foreign non-residents. But permanent residents are not foreign non-residents under Canadian law. They hold full legal residency, earn income in Canada, pay Canadian taxes, and have full right to purchase homes. Equating foreign speculation with legal permanent immigration is a policy fallacy, and the market numbers prove where the actual buying power lives. Why the ban had under 1.5% impact on housing prices. Did the foreign ban lower housing prices when it was introduced? The official data shows foreign buyers accounted for less than 1.1% to 1.5% of total home purchases in major provinces like British Columbia and Ontario prior to the policy. In fact, national real estate benchmark prices rose over 20% in the years surrounding the ban's introduction. Banning 1% of market buyers was never going to solve a systemic structural deficit in housing. The real engine: supply versus demand deficit. The Canadian Mortgage and Housing Corporation, CMHC, estimates Canada needs between 430,000 and 480,000 new housing starts annually to bring affordability back to healthy levels. Right now, Canada is building closer to 250,000 to 260,000 units per year. This is a shortfall of nearly 45%. When you welcome hundreds of thousands of new permanent residents every year into a market with a 45% supply deficit, prices are supported by organic demand, not foreign loopholes. We have a really huge inventory oversupply of, more specifically, condominiums rather than just general housing. It's multi-family, multi-unit homes that are seeing this saturation. So when you have a deficit in incoming residents and you have this oversupply of inventory, the demand will get eaten up. It'll take some time, but it will get eaten up. We're not building enough homes to satisfy the constant demand. What happens post 2027? The Australia blueprint. As the foreign buyer ban approaches its sunset date, Canadian policymakers are actively looking at global models like Australia. Australia prohibits foreign buyers from buying existing resale homes, but it actively encourages them to buy pre-construction and new developments to fund new housing supply. Shifting offshore capital into new home construction rather than existing inventory could unlock essential developer financing while preserving resale stock for local buyers. Smart wealth strategy for GTA buyers and investors. So, what does this mean for your real estate portfolio in Toronto and the GTA? First, don't time the market around political band-aids. Timing the market is never, ever a good strategy. Long-term appreciation in the GTA is backed by population growth and economic immigration. Second, focus on high-density urban transit nodes where PR families and professionals prioritize living. Toronto, Oakville, Mississauga, as well as Pickering, Ajax, Hamilton. These are high node areas that attract buyers, it attracts permanent residents because of the attractiveness of being close to transit. Third, evaluate pre-construction and multifamily opportunities that align with incoming supply policies. As I mentioned earlier, this is where the saturation lives. This is where the pricing softening exists. So this is an optimal opportunity to buy into those types of real estate. It's the multi-unit types of real estate, as well as the recently completed and pre-construction models that provide the most options and the most affordability. The key takeaway today, in other words, is Canada's housing market isn't driven by foreign ghosts. It's driven by real people making permanent homes in our cities. Understanding these underlying demographics is how you build lasting real estate wealth, brick by brick. Follow the podcast channel, like, comment, and share this episode. I'm interested in knowing what your thoughts are on foreign investment, where things stand in the marketplace in terms of inventory levels. Are you seeing the desirable options in your neighborhood? Reach out anytime to analyze your next strategic move in the GTA market. It's staying informed that gets you ahead, not sitting on the sidelines while other people make strategic moves. Get into the game now, if now is your time to do so. If you are not looking to make a strategic move, then at least analyze where your real estate portfolio stands in today's market. How attractive it is, are you maintaining it? So that when you are ready to make that move, you will get top dollar for it. Ciao for now.